this episode of the Cold Start Corner Expert Series. I'm Eric Matei, joined by Evon Mendrin for episode 2 of this 3-part series we're doing about financial planning for your cold start. Evon, welcome back to the Cold Start Corner. Great to see you again.
Thank you so much for having me back on.
So, and for those that may have missed the first episode, so Evon Mendrin is a CFP and a CSLP. He's the founder and lead advisor of Optometry Wealth Advisors. So in episode 1 of this series, Evon shared some insights on the keys to financial planning for your cold start from the preparation and feasibility phases. By the way, if you missed it, go ahead and find it at the Akrinos YouTube channel or Akrinos.com. Here in episode 2, we're going to jump into financial planning for your cold start around launch in the early years. So, Evon, I know before we clicked to go live, as we were talking about this, we were talking about, the circumstances are really different once you launch because the importance of really fighting to grow that business comes to be your number one priority. So why don't you kind of let's kind of talk about some of these financial considerations and financial planning through launch in the early years of the cold start.
Yeah, this is an exciting time. Doors are open, right? You've done all that work because you can absolutely do it. You've planned the feasibility analysis. You've gotten that early business plan started. You've gotten the equipment. Everything's ready to go. Now doors are open. Welcome to the public. Exciting time. So what are some things you should think about both in the business and also in the household? These early years, as Eric said, it's all about fighting to get that business growing and to become sustainable, going from surviving to thriving. So that's your core focus. But you want to start to build some good habits and get used to the financial stuff that's happening in your business and how that affects your household. So you just want to get used to a lot of the stuff. And one of the first things you want to start to get used to, start to look at, get familiar with, are your basic financial statements in the practice. It's going to be your profit and loss, which is going to show your collected revenue, all the expenses that are deductible in the practice, and then your profit, everything that's left. So it's going to be your profit and loss. It's going to be your balance sheet, which is going to show your assets. A lot of times it's going to be cash and equipment, your assets, your liabilities, and also what's left, the owner's equity. Your balance sheet, and then your cash flow statement, which is going to show you what caused changes in your cash from one period to another. So you're going to want to get familiar with those. You're not going to have a whole lot of history to look at and analyze and really look at trends, but you want to get familiar with what those statements are telling you. What's going on in your business from a financial standpoint? Those tell the story. So you want to get used to seeing those regularly, and you really want to try from doors open to try to keep those books as clean and as accurate as possible, right? You want to make sure transactions are coming in as they should. They're categorized correctly. You're reconciling these statements each and every month. And really, Eric and I will probably say this all day, every day. Like, this is really where you want to work with a bookkeeper or an accounting professional early and often. That's really worth the investment. Get that off of your plate. Make sure professionals, making sure your books and the information you're looking at is accurate from day one. So get familiar with those. You want to look at cash flow especially, and recognize, and maybe this is the topic for another video altogether, but there is a difference between profit, what your profit and loss statement is going to show you, and what's actually happening in terms of cash. Things are handled differently between the actual cash that's going out and into your business versus what you're seeing on the profit and loss, because there's accounting gains and tax planning things that happen on the P&L, and cash is just cash, right? So you want to look at your cash especially well. You just want to have a way and a system of looking at how much cash is in the business, how much is coming in, where is it going, and where do you want it to go to next. It doesn't need to be this overly complicated system. You can be a simple spreadsheet that you put together. It can be, there's some books that will help you think about cash flow in the business, but just have a way of looking at cash flow and keeping an eye on that, especially over time. Get really familiar with that. Go ahead. Yeah.
Oh, I was just going to say, and I suppose it's through that you can come to really find that stability, right?
Yes.
Kind of really having some predictability to the cash flows, and from there be able to get into some more financial planning, right? And that's
Absolutely. Yeah. Cash, I mean, cash is everything. Cash is the lifeblood of your business. It's fuel to the fire, it's gas for the engine, whatever other metaphor you want to use. Like you need cash flow to have a healthy business and to provide for the next investment in your business and to provide for whatever other things you want to do in your life. Cash flow is everything. Revenue is important. You have to have revenue. Profit's important because you want to keep as much as you can from that revenue. Cash flow is even better because cash is actually what you can use and it's going to provide for all those different things. Absolutely. The next thing you want to think about as you start to see revenues improve, as you start to see a little bit more cash flow in the business, is you want to just think about how you're going to pay yourself from the practice. Because at some point, you're going to be able to do that. You're going to be able to step away from any part-time associate work you're going to be doing and now be full-time in your business, which is a just phenomenally exciting time in your career and in your business. So just start to think about and prepare how you're going to actually pay yourself from the business. And this is another area where you're going to want to talk with your professionals, talk with your tax and financial advisors. The reason why is because it's going to be dictated mainly on the type of business entity you have. A single member LLC, for example, that's not choosing to be taxed any differently. That's going to be just owner's distributions. You're basically just going to be distributing money from your business bank account to your personal bank account, right? It's pretty simple. If you're being taxed as an S corp, for example, well, then you actually need to run payroll and pay yourself a reasonable salary. So there's more that goes into that in terms of running payroll, tax withholdings, employment taxes, things like that. So work with your advisors to figure out, okay, based on what my business is, how much can I start withdrawing from the business when that time comes? And what way do I need to do that correctly? So thinking about how you're going to pay yourself from the business. The next thing you want to think about is how to handle taxes from the business, because as revenue grows,
yes,
you're going to have to start to owe taxes on that taxable income that the business generates, which is fine. That's good. You want your income to grow. Taxes are just a natural part of that. What you want to do is just be prepared for that. So a few ways you're going to want to think about handling this is that, number one, if you are an S corporation, if you're choosing to be taxed as an S corporation, which is common as practices grow, it's usually where they'll head. You're able to do that through withholdings on a salary, just like you would do if you were working for any other practice, if you had a W-2 income. In addition to that, you also may be planning for quarterly estimated tax payments in April and June and September and January. And so you want to set aside, I mentioned in our last video, an account I like to have is a tax account, bank account, to plan for those quarterly estimated payments. You may want to think about pulling some money away from your operating cash flow, dumping it, setting it aside in that tax account so that when it comes time to make those quarterly payments, you know it's there. It now belongs to the government, right? So you want to think about, okay, now that taxes are going to start to increase, because my income is increasing, that's a good thing. How do I just prepare for that? That's the next thing you want to think about. There are some other tax considerations too. One thing I always say is that you never want to let a low tax year go unused, right? You don't want to let that go to waste. And what I mean by that is that sometimes when you start a new business, you see your income drop, sometimes considerably, relative to other years. You know, what you're used to in the past and what you might see in the future as the business grows. And a lot of times there's a temptation to just let that be and just enjoy the low tax year. But because it's such a low year from a tax perspective relative to other years, it's actually an opportunity to scoop a little bit more income into that low tax year and just take advantage of those low tax rates. And this is a larger conversation. So I just want to say, if you find yourself in a really unusually low tax year, consider that an opportunity to bring more income into that year and just utilize those low tax rates a little bit more. Some common examples are like Roth IRA conversions. Like if you have retirement accounts that you've built up from past work, maybe that's something you can do. If you have capital gains from investments, for example, maybe that's a way to sell those and harvest those gains at maybe a zero tax rate. So just think about how to utilize that year as best as you can. Did you have any thoughts or questions on that, Eric?
Yeah, well, I was going to say it seems like, I mean, you really hit these key points. And I know before we hit record here, when, as we were talking through all of these important things, it boils down to cash, cash
Yeah.
flow, how you're going to pay yourself. And then those tax considerations. I mean, those are really like from a financial planning for the cold start.
Yeah.
From launch in these early years, right? Getting on your feet, but realizing what you do now and the way you structure things now is certainly going to have some bearing, some implication on what the future may look like.
Yeah.
And importantly as well, something else you point out that I think is a key takeaway for viewers, and that is all of your bookkeeping and accounting, and have all that stuff really polished from day one and orderly from day one. Because again, it all goes back to reporting that cash flow, and you really can't make strategic decisions for your business and tactical, put short-term tactic in place if you don't have a good, clear understanding of exactly what that cash flow is looking like. So,
Exactly.
Yvonne, go ahead.
Your decisions that you make are only going to be as good as the information you have, right? And those financial statements tell the story of what your business has done. And if they're not accurate, then how can you really make good, accurate decisions on what to do with that? So absolutely try to make sure those are as clean and as accurate from day one as you possibly can. One other thing and as we sort of wrap up, a few other things I want to bring to light is that, think about the risks in your life from a financial planning standpoint. We talked about setting that initial budget in that last video. Hopefully as a part of that was still basic financial planning or basic family insurance planning, like planning against death and disability in your life through life insurance, basic life insurance and disability insurance. Try to make sure you're still covering those risks in your life as best as you can, because even though your income is potentially dropped as you start the business, those risks are still there as a part of your life. So making sure that you are having the appropriate business liability coverage in your practice, which you probably would have done as you started to get that business up and running. One last thing I'll say is that, the health of your business and the health of your household are intertwined as a small business owner. Yes, they are totally separate financial entities, right? Like your business finances are your business finances and your household finances are your household finances. And there should be a wall between the two. But the reality is, as a small business owner, your business is your life and it's a part of your life. And what happens in the business financially absolutely impacts the household financially and vice versa. So the decisions need to be looked at in an intertwined or integrated way, keeping both of those into account. One last thing I'll say, and we can wrap up here, is that think about your ideal life from a financial standpoint. Like how ideally would you like to live? And what would it take financially in your household to make that happen? And as your business grows, build your business around that. Figure out how you're going to build that into your business. And we can talk about maybe that more in the next video, but that's one thing I'll leave you with.
Love it. Evon, I tell you, this has been a really great conversation. Thank you so much for what we're doing here. Again, exploring financial planning for the cold start. We're wrapping up here, episode 2, all about financial planning for that cold start through your launch and early years. If you missed episode 1, definitely go back and catch it, where Evon talks about financial planning, pre-launch through planning and determining the feasibility of it. So as we wrap this up, how can folks get in touch with you if they would like to explore these concepts further?
Yeah, check out my website, optometrywealth.com. You can always shoot me an email, Evon, EVON, @optometrywealth.com. And then check out my podcast, the Optometry Money Podcast, anywhere you get your podcasts, and you'll find me there. And, you can absolutely do this. Like, hopefully none of this is scaring you away or seeming overly complicated. Like you have resources in your life, professionals in your life that can guide you through this. You can absolutely do this. You've got the skills and the desire to do this. You can do it. So.
Absolutely. So, well, Evon, thank you again for joining us here at the Cold Start Corner. I'm Eric Matei, signing off. For more great content like this, be sure to subscribe to the Akrinos YouTube channel. Visit the Cold Start Corner at akrinos.com, and definitely follow us on the socials. Evon, see you real soon for episode 3 of financial planning for your cold start. Until then, take care.
Take care.